Good morning. So, as everyone can see, kind of right off the bat, we're missing someone. Our boy Jordan's out, but I'm sure he'll be back a little later. So, we're going to fill in for him. What does he call it? A FAFO Friday? Is that what we're doing today? How's it going, Leah? How's your week been anyway? Let's just get started
Hi,
chatting.
Michael. Nice to see you. I'm in Germany right now, so I'm gonna
Oh,
be in Europe for a month, and I'm enjoying this 3 p.m. start. So,
that'd be great. Yeah, I
yeah.
actually went, I was on doing another presentation about how kind of every country in the world, their market's ripping. So if you look at the
hmm
EWG, the German index, so shout out Germany. They're hitting new all-time highs, what, 2 days ago? So good
Yeah,
for them.
yeah. I
Good
have,
for them.
as I said, that was my trade for this year to allocate a lot of my investments into European stocks, especially Germany, and the defense is, I think, pulling it up because when you look at the defense, we can
Yeah.
go over them later on. It's amazing.
Well, and I think it's been very good. I know a lot of institutional traders, investment advisors that always had like an international sleeve, and they're always catching flack from their clients about, oh, why do you have it's dragging down your performance? Why do you have this little sleeve for international? And now they're like picking up
hmm
the phone every day, like, told you so. This is why you have this, because someday, something like this is going to happen, and these countries are going
Yeah,
to just rip, right? So here's EWG for
yeah,
those are
yeah.
chatting. But take a look at go through the idea here with the doc. Did I mess up the doc? It just says Trump tweet delays. Is that this week or last week? I'm gonna click on this again. I apologize, guys. Right, Jordan's way better at this than I am. Make sure I'm going to the right place, because it's one of those. If the headline is Trump tweets something, then you still don't have any time reference of when it's happening. But yeah, it looks like these are a lot of what happened yesterday. I think has to do with the fact that the courts are trying to block the tariffs, and now that's going to be this big extended legal battle back and forth for what's actually going to happen with the tariffs. I'm not a Canadian or I'm not a U.S. person. I'm not a scholarly expert on any of this, but what do you think? Do you think these tariffs are going to get blocked and then we're just going to rip to new highs, or do you think the back and forth is going to bring us down a little bit lower?
I mean, the quarters are already changing the course anyways. It's just all happened in one day, right? So who
Yeah.
knows? I mean, there's this big saying about the taco trade, right? The whole week, everywhere you could see the taco trade, that Trump always chickens out, and that's kind of happening. So we'll see how
Well,
it lands. I don't know. It's just a negotiating technique that nobody really knows what's behind that. So,
well, and it's wild. He always does it. So here's bonds, and you could look at TNX. You could do rates at the same time. So I think somebody's gotten into his head that if the 10 years above 4.5%, that's going to really blow stuff up for the economy. So you can see this is when we had this massive spike in rates right here. So this is just a chart of the 10-year yield. It's probably better for people to look like this. We had this massive spike in rates, and this is where he did that whole I'm backing down on all tariffs. And then it came back out here, and then he's like, "This is when the China kind of tariff. Oh, we got a big, beautiful deal. It's amazing." And then he also, this is where the court started dropping it. So someone in his head, I think rightfully so, has gotten to the point where he's like, if we start getting 4.5, 5% rates, it's going to be very expensive to pay down the US debt. A lot of these companies are probably going to have a hard time paying back their debt as well. So I don't know. I think it makes for a pretty easy, right? You've got this on the TLT. Every time you get down to this zone, maybe it's time to buy stocks because there'll be a tweet going out saying everything's
yes.
great now, right? But
hmm
I heard this taco reference, but I'm so offline now that I had no idea. I thought it was like a Taco Tuesday thing. So I'm glad there's this doc here because it makes way more sense. I did. I see it all there. I see the taco references now. So yeah, Nvidia. This seemed like much better news to me than most people kind of thought. I don't know if this is baked in, but Nvidia obviously had earnings. Everybody waits on bated breath. I don't know, you guys that are in New York still, if you're still doing those parties. Have you ever seen they would do like watch parties for the Nvidia earnings at pubs? Nice little gap up, held the gap okay, although sold a little bit later. So, again, more tariff China stuff, right? What do you think of semis? I think they're just range bound. They're probably going to be that way for a while yet.
Well, Nvidia surged despite warning about the 8 billion hit from China curbs, right? So Tesla rallies because Elon Musk left his 130 government day. So yeah, we'll see.
As a
Um,
Tesla holder, I want to see him, which I think a lot of people did, right? This is started rallying when he started kind of hinting of, all right, I'm done with
yeah.
this, guys. Like, good, I want to pay you to sit and make robots or whatever it is you're going to do next. I don't want you to try to, get a couple bucks back from the government because
Well,
it was what
companies
supposed.
need CEO, right? So he's going to do what he's supposed to be doing. And I'm also holding Tesla, and I'm excited that he's going to take care of the company again. So it makes sense that Tesla is rallying. And what else do we have? What other sectors did we have green yesterday? It was healthcare, right?
Yeah,
XLV.
XLV was finally green. I think that was.
Mm-hmm.
I don't love the chart, but I do like the fact that, right, we had all this resistance for years back here in XLV, and we're coming back to meet that now. So if this prior resistance acts as support, that's usually a really good trade to take.
Mm-hmm.
When it comes to news, I think it's all about that RFK guy. Some people seem to think he's going to mess some things up, but and then obviously a big component of this is UNH and what's
UNH.
happening there.
And
I'm
check
still holding
LLY, please. Check LLY.
a Lily. I got some Lily too,
Yes.
and
Mm-hmm.
less
Look.
less happy about my Lily trade. But what a support here on
Mm-hmm.
Lily.
Yeah.
You and Lily as well. So that's why you wanted to
Yes,
look
I'm
at them.
also in Lily, yes,
Yeah.
because I like the support there, but we'll see. I
Well,
think, where would you
again,
stop out? 708, 700, maybe?
yeah, right. You got this. I like support better, and I think the kids nowadays call it like a liquidity grab or whatever it is. The newest guru is saying, but I like support that gets broken and then immediately retaken. It just
Mm-hmm.
shows that anyone who tried to short this breakdown is just having a really bad time. So they're going to probably cover if we end up holding. Also means that anyone who sold out here might be kind of might be this support right here because they got tricked out here and they're looking to get back in. But I like this one as well. It's one of those that if like look how strong this thing's been over time. So
Mm-hmm.
if you get a base that resolves kind of like it did back here, and even let's ignore all of this, but even if you got a move like that out of the base, that the same thing happened way back here. You had this big base and then it resolved higher. I'll take that. That was a 27% or so gain. That'd be
Mm-hmm.
amazing, right? That would
Yes,
get us, I guess, what 1,200, 1,300 on that. Take that all day
yes.
long. Just going through here. I know we're probably going way off script compared to normally what you guys do, but uh, we miss our boy. CRM, very interesting. This one had a gap down, but unlike it was the opposite of Nvidia that gapped up and sold all day. CRM gapped down and rallied all day. I love charts like this personally. Just shows that there was somebody waiting to buy that dip. Someone was waiting to kind of get involved there to the upside. Because if you look at the intraday action, I was watching this yesterday. It just dumped right off the open and then just got accumulated all day long, and then a huge rally into the close. So I don't know. Do you have any Salesforce in it? This seems to be a sleeper AI play. I think. Do you have any of this?
I don't, but I sold some puts yesterday, so I found it as a good idea after a move like that. I used to own CRM, but it was just a little bit slower pacing for me. I liked
Yeah.
more high flying stocks. But yeah, it's always great to sell puts if you, as we talked about it, right, on UNH as well.
Yeah.
So that's what I do.
I gotta get better at that. I gotta maybe talk to you offline about that. I do because I see a lot of these moments where I really like this chart, and I know that if it got in,
Mm-hmm.
if it dumped from here into what 235,
Yeah.
230, that's I'd probably want to buy it there. So is that roughly where you sold your puts at? Just that
No, I did
support?
225, and the reason why I did that is because the 200 daily moving is at 236, and I want to give it a little bit more space below, and then I also look at the deltas as we talked about the last time. So yeah, for me, 225 was the strike, um, and a month out. So that's what I did. And
Okay.
UNH I still have, and UNH is moving or not. It's also
Yeah.
usually this healthcare stuff is moving when tech stocks are having a harder day. It was interesting yesterday, right? We rallied 1.7%, and then we sold off after the court decision to, first to block the tariffs and then reinstate them. I mean, it's quite fascinating what's
Yeah,
happening.
I think we're in frustrate everyone mode. That's kind of what I call it, where right, you got a little bit of a break above this high and then it's sold back down, and then who knows, maybe we come back to test this low and then we rally back up, and just to mess up everyone. And the reason I always look at that is this is the commitment of traders data. So this
Mhm.
shows, right, the net positioning of institutions, and they are still net short a little bit, about even.
Institutions. Oh,
Yeah,
wow.
the large institution. So you can add a few things to this, but if you add the commercials, it's usually a mirror. But yeah, so the large traders are still net short, and they're usually wrong. Right,
Yeah.
they were net long in through here, and then they got short in through this area, so they're usually wrong. It's a good kind of sentiment indicator, because you can do whatever you want with actual sentiment. If I know where you're positioned, then I know if you're really happy or sad. You can tell me you're as bold up as you want on the market, but if you're short, it doesn't matter, right?
But
So,
why are they called smart money?
oh, I think, yeah,
Why are they called dumb money? That's
this
rich man.
rally in particular, I thought was amazing, because I'm sure you saw the same stats too, where retail bought this dip
Mm-hmm.
really hard, just
Yeah.
plowed money into it, and that was, you saw it like from Robinhood, and I think Webull put out some
Yeah.
data. Of all their retail clients, they bought so much, and then you can see that the large money was selling futures into this dip. So, shout out to us, right? Shout out to retail. We
Time,
finally
time
got
to
one up.
time to rename it.
Yeah, we're the smart money now.
Yeah.
Um, let's see
What
a
else
couple
do we
things.
have? What other
Just going
stocks?
through this,
AI.
yeah.
Let's talk about
AI.
AI.
I have no idea what this
2023.
company does, other than the fact it has AI in the name. So so people want to equate it. I don't know if you know anything about these guys, but I have zero knowledge.
I know I lost a lot of money with them in 21. That's what I remember. But I think they were up with 20% yesterday. Yes,
Yeah.
20.77% after the strong results and a new 450 million Air Force contract. So that's what they got.
Oh, okay. So they must do something with
Mm-hmm.
Air Force. I'm kind of looking, draw this out for the people, but I'm kind of seeing a potential.
Inverse head
Right?
and shoulders.
Little inverse head and shoulders there, and we broke. This would be the confirmation, if that's going to be true. I like these patterns because, again, I'm one that I really want to demystify all this stuff. I think a lot of people, right, we try to hold all these crazy names or whatever, but essentially all a head and shoulders is, you got a downtrend, then you got a bounce, then you got a higher low. So, you're just kind of betting that this downtrend is going to turn into something like an uptrend, right, where things are going to move higher. That's
Yeah,
all that
that's
is.
good.
It's just there's only a handful of ways things can bottom, right? Either a V bottom, or some sort of double bottom. But yeah, it looks really interesting to me. Again, I have no idea what they do. I don't know if they make any money or anything like that, but I just know that this is one of those names that, when the other AI things are rallying, people try to go to. They don't make any money. Um, yeah, 100 million in revenue, and then lose money every quarter. But uh, interesting, right? But then I zoom out and go, yuck. It's just
Let's
been
go. Nice. Yeah, I would
crazy.
trade it if it retests the gap. Probably would be my trade.
Yeah.
It doesn't look bad. Yeah. Let's talk more about Tesla. I'm excited because I'm actually in a trade. So what's happening with this? So what happened? So Elon Musk has officially left government, right? And
Yeah.
they're launching first self-driving cars in Austin in June. So that's exciting. I can't wait for those.
Do you believe that?
I hope that's what they say.
Because Elon has a very, and I'm not. I know there's a whole bunch of Elon haters and people who are obsessed with him. I don't care, but I just know he has a history of. This man's promised me self-driving cars for like 10 years now.
Yeah,
I hope
I
so. Like,
know.
I
Yeah,
live in the middle of the woods. I would love to, right, just tell my car to go somewhere, and have
you
it
can
have it take me
relax.
out. Um,
Yeah, but it gets
but
better with Tesla. So the investors requested Elon to work at least 40 hours a week for their company, for Tesla company, right?
yeah,
So let's see, that's another request, and I think he should. And in meanwhile, Uber dropped on speculation that if Tesla pulls off full autonomy, it could undercut the ride share space. So Uber was also doing really well lately. It was a beautiful breakout of this um, distribution phase there.
Hmm.
Now it's retesting right back to the levels, so that could be a good trade for me because I missed the boat on Uber. I'm really sad. So maybe that could be a setup there.
Well, that answers my question because it's one of those you break out, you pull back, and then right,
Mm-hmm.
you either bounce from there or it
Or
ends up
you go
being a
down,
big,
yeah,
big
yeah,
failed break.
yeah.
So you're taking more of the bet that this area potentially could hold,
It's
and
support, yeah.
yeah, I think so too. I don't think there's a way in the world where Tesla comes out with these robo taxis and Uber doesn't somehow get a piece. Like they don't get
Yeah,
involved in any way. I
yeah,
don't see a world where them as a company's like it's fine. Like why wouldn't they just buy a bunch of them and
yeah,
use their? Because I will still get off the plane like I always do and pick up my phone and go to the Uber app. I live so far out in the sticks. We don't have Uber out here. I can't use it
yeah,
locally, but it's still I have it on my phone. I've got it hooked up to my credit card because I know pretty much everywhere I go in the world, I can pick up the phone, I can hit a button, and then a car shows up. So yeah, I'm more of the camp I think that you are that this stuff is just going to be bullish for Uber. They're going to buy a fleet of them. They're going to be everywhere, and I'm going to use my same app, and they're going to make a little cut off the top line, and again, they'll be fine.
yes.
Um,
Well, let's
because that
talk
is
about beauty now, Michael. Let's talk
oh
about
yes, no,
beauty.
this
I need to
is
talk about
this
beauty. I mean,
is
come on, I'm a girl.
well, and
So
you
what
can
is
tell
this
by
thing, huh? Elf, elf.
yeah, you can tell by looking at me. I'm very into my makeup.
Well, but Elf bought Hailey Bieber's road company for $1 billion. So what do you think about this transition? I mean, the stock seem to like it, and I love the trend line breakout there. It's probably uh, the stock
so
liked the news.
So yeah, the only thing I know about Elf is this. Everyone I think paid attention during this massive trend that it had in
Mm-hmm.
2023. This thing was just
Mm-hmm.
insane, and then a fall from breaks. I don't know what that other company is, but I do know, generally speaking, the acquirer goes down when they do a buyout, and
Yeah.
the company they're buying goes up. And the theory being is that quite often, if you're buying a company, it's some sort of an overpay, and because again the way that it's like a generally a risk-free trade, right? There's these arbitrage people, and the only thing they'll do is they'll buy the company getting acquired and short the acquirer. So the fact that it went up on that news, that's interesting to me because you would expect the opposite. And
Yeah.
I'm sure you agree. Most of what we do in the market is
Mm-hmm.
try to figure out the off thing, right? The thing that's not supposed
Yeah.
to happen. And yeah, this is one of those things that it shouldn't have happened. It should have went down on the acquire. So who are they buying? Is this another publicly traded company or is this
Hailey
a
Bieber's
private?
road. I don't think it's. I don't think it's traded
Uh,
publicly. Road. No, road. RHODE. So I don't think she's publicly traded. No.
no.
Mm-mm. I mean,
And
remember when Adobe was trying to buy Figma? I mean, they were going to overpay for Figma. I think they offered $20 billion, but the companies were $10 billion. That's when Adobe really tanked. But again,
yeah,
it was a bad deal for Adobe. Kind of good deal in the long term, but financially for everyone, it's like, whoo, you're overpaying. So this could be a good deal. I mean, it's not always a rule, right? We see it happening often that the company that's buying will have a little bit of sell off, but
yeah.
I would have to dig more into it. It's interesting. I look
Well, and
to
this
it.
is only a $6 billion market cap company. So to spend $1 billion, you're spending 1/6 of your entire company to buy another
Yeah,
company,
yeah,
and you go up on that news. That's interesting because how are they? I'm just like going through basic financials. Like, how are you going to fund that? Right? How are you going to go through? There's no way they're sitting on $1 billion in cash. So that'll be interesting to take a look at to see if they're raising money and how they're going to raise
yeah,
money to do it.
yeah. Will be
Uh,
interesting to look at. If you want to invest in this one, then it's good to do some research for sure.
Costco beat. Costco seems to always beat. Like this is the
Yeah.
most. This has to be the most just bone like solid company on planet
Mm-hmm.
Earth. Even right during bear markets, they end up just doing absolutely fine.
Yeah.
Bull markets, they do fine. Like look at this monthly chart. Just from, I always look. Just reminds you that sometimes if you have a good company, you can make a crap ton just by doing nothing. This is
Yeah.
2000% return
Yeah.
from if you'd bought this, well, the year I was born, and then and then
Wow.
just held it till today. That's
What they
crazy.
did with 63.2 billion and have 8% year-over-year growth, which is great. I mean, think about it. It's like the S&P on average, right? It's 8% a
Mm-hmm.
year. So you can just also own Costco.
But and a nice dividend that you're making at the
Mm-hmm.
same time. It's not
Yeah, yeah,
huge. It's only a couple percent, but yeah, you're getting paid
yeah.
just to
To
wait. I
hold,
think
yeah,
that
it's a
one's a
very
great one.
nice one. Is it a little bit down pre-market? I think tiny bit,
Yeah,
nothing
we can
much.
check on the. I haven't even
Mm-hmm.
checked on the SPY since it's been whatever that news came out at 9:30. That was like consumer spending or something. I think that sent us for a bit of a tizzy, but it looks like we're trying to recover.
Yesterday, yeah.
We're
Mm-hmm.
trying to recover that a little bit nicely. We got Gap. So Gap's moving. I'm more of a
Mm-hmm.
Levi guy, but a big gap down. This is one of those companies that you just look at something like this and you wonder why you're still a public company at this point. You're not adding any value to shareholders, and what are you gonna do? You sell jeans? Like it's not like you're gonna come out with a close 2.0 or something. So I don't know. If I was in this kind of name, this 1999 until now, it's done absolutely nothing. So
Yeah.
you
Gap
know,
now. And a lot of people were expecting because of this that maybe like American Outfitters that's completely beat up chart, it's gonna do something. Yeah.
you know,
You can AO, I think AEO.
yeah, that's down pretty big in the pre-market.
Mm-hmm.
It's down here
Yeah.
$10. I'm gonna put
Mm-hmm.
that meets a little algorithm I run to buy gap downs. So I just gotta do that there. Now that's set. Um, both Best Buy and HP. So more warning talks. Basically all retail. If you go to XRT, for example, we're probably seeing a lot of this in XRT, which is just your
Retail.
retail
Mm-hmm.
ETF, but really wasn't that bad. So we're down a little bit here pre-market, so that's more tariff nonsense, but not huge. So we had Best Buy, so BBY, down quite a bit yesterday, but this is another one that
Yeah.
you're just good for you
Obviously.
for not dying. I think as a company is pretty much all you can say,
Yeah.
because I don't know about you, but if my laptop broke tomorrow, I'm just getting something on Amazon. I'm doing something. I don't need to go into the store
Yeah.
to
No.
do something.
And
Like
there are a
I
lot of issues with crime as well. Same like Walgreens. A lot of these companies are really struggling with that because a lot of, I mean, I don't know in Canada, but in the US, some states just don't have any rules around it. So I know Best Buy was just closing a lot of stores due to that too. I mean, it's probably even better for them to not have the stores and have just online. But again, yeah, Best Buy, I don't know. It's like,
Yeah, why? I just don't know. It's one of those things why the biggest markup is always on like the little adapter that you need to run, or the little thing to do a pair of headphones or whatever. And for that in particular, that's completely outsourced to Amazon for me.
yeah,
And it
yeah,
might just be again because I live so far out in the woods that the fact that someone brings something to my house saves me an hour and a half, 2 hours as opposed to going in and getting something. But I just look at these companies and I go, why does this exist? Now, HP is the same thing as a computer maker. You're competing now with Dell and all of these, but Dell's kind of been trying to transform itself over time into an AI play, right? They've been trying to, right? Dell has been trying to do data centers, and that's why its stock, I think, more looks like this, right? And then HP that just makes the laptops, they look a little bit more like this, which is to say near nothing. You can go back 2009, 2005, and you're right at the same price. So yeah, these to me are more painful to look at than companies that are just tanking. Because if the company is just absolutely getting fallen apart and you still own it, then that's just on you. I'm sorry, but right, have a stop loss, have an exit point. But when your company does nothing, it still kind of keeps hope to a lot of people that someday this is going to be the next base to break or whatever. But a lot of these companies are just, I think zombie company is the word that people use that I end up liking. That's not HP. Sorry, HPQ.
yeah, yeah.
That's a different one. Same chart though. Yeah, just dead.
We're opening in 4 minutes. I just wanted to quickly go over what's happening today before we open the market, and then
Yeah.
we go back to the chart. So we had the core PCE at 830, right? And that actually came in 2.1% below expectations of 2.2%. And the core PCE inflation falls to 2.5% in line with expectations. So that's for April. So that is good. Inflation is going down. We'll see when the Feds are going to cut, because I think they're getting a little bit behind schedule as they did before with
Let's see.
increasing of rates. And now we have 9:45 Chicago PMI, and 10 a.m. we have Michigan consumer sentiment and multiple Fed speakers today as well. So it will be data filled day. So I don't know. The market probably is going to shop around today. Let's look at SPX quickly before we open.
Yeah, I'm just looking at the June meeting just to see,
Mm-hmm.
and there's still
Expectations
97% chance no cut
of
in
no
June.
cut. Yeah, that's very strange. I mean, at some point they
Um,
should do it.
and then still, yeah, because you're right. If inflation is lowering, and we're
Mm-hmm.
seeing, I think yesterday there was a bigger job loss than expected. You
Mm-hmm.
think that would just be a
Yeah,
no brainer? It's time to bring them in a little bit.
exactly. I think so too. The reason why they're not doing it now, they're thinking that the inflation is going to go up with the tariffs. So that's kind of their reasoning behind not lowering the rates. But yeah, let's see what happens in June. I hope they lower at least a couple of times this year. And for the SPY, I think we're just gonna chop today. There's too many Fed speakers. I have my levels on SPX for today. If you guys are interested, I'm happy to give you my levels based on hedging and option
Yeah, and feel
flow.
free to share your screen if you want to.
Yeah, let me just go quickly
If you can't,
over
I
it.
certainly can.
Of course,
Yeah.
yes, yes. All right, so the SPX inflection point 59.32 for today, meaning that's the decision point for me. If we get above this level with strong volume, my next level will be 59.60 on SPX, and below it will be 58.93. So this is kind of my roadmap for today. I always have the roadmap before I trade, and then if I take a day trade later on, which probably today I won't because of exactly all the speakers and data coming out, I would then trade based on the support or resistance levels on SPX and then play high beta stocks. So we also have a lot of bearish flow to crypto today, which I was observing. So we'll see how crypto is going to be doing into the weekend.
Yeah, what's your take on that? The divergence between crypto, Bitcoin in particular, and stocks has been a lot recently. The stocks were down basically flat yesterday after
Mm-hmm.
selling off,
Yeah.
and crypto just tanked, and then all night sold off as well. Do you think that's a leader, or do you think it's something that's a laggard too?
Actually, supply demand with crypto news as well, but it just ran so much that I think it's completely normal that we're gonna have some profit taking around there. And I think also yesterday they announced that the quantum computers are getting so fast that they can actually mine all the Bitcoin much faster. So there is a speculation how is it going to affect Bitcoin, and that I think where the news that came out yesterday that Google basically said that their quantum computers, yeah, there we go. Nice. Are becoming just so efficient, and they are probably going to be done with all of that faster than they thought, not in decades. And I think that sparked a little bit of sell off there in crypto. It's again the fear mongering that it's not going to be what we are expecting. So that could be the reason, the news. And again, like look at the chart. I mean, GBTC, EBIT, and all of those look pretty much the same. So a huge zone of chop, and then breakout of the highs we had, and now a little bit of retest. So for me, it's still not as bad. I'm not
Hmm.
panicking. I actually would welcome if we retest at least down to the 8 moving average on daily, or this is weekly, pardon me, daily, so I can actually add more.
Yeah, I think my biggest worry as just a supply and demand guy is that we had
Mm-hmm,
the breakout to new all-time highs, that 109
mm-hmm,
break,
mm-hmm.
and
Yeah,
then yeah, it's your kind of purple line that you have there
yeah,
on the top,
yeah.
and then we failed that pretty quickly, and that
Mm-hmm.
purple down bar, the big kind of engulfing bar that failed that breakout.
Mm-hmm.
That's the one that's kind of
Yes.
had me thinking, and the
Yeah.
fact that Bitcoin kind of let us out of the Bitcoin was first to rally when the market was just kind of
Mhm.
sitting there doing nothing. I worry a little bit that we're potentially getting the other side of that thing, in which Bitcoin could be leading us down. So again, I hope it's not true, because I have some crypto, and I've got some kind of meme coins spread throughout that were interesting. I don't know if you saw Pepe
Mhm.
yesterday. Trump tweeted something and it had the frog in the background, and then all of a sudden this thing in like 1 second shot up like 20% and then just came right back down. Um, if you're trading a coin called Pepe the Frog, then that kind of volatility, I guess, is something that you're just like totally cool with.
Yeah, I mean, it could lead. I mean, Bitcoin was leading a lot in the past years. I usually looked on Sunday evening on futures and also Bitcoin, and then
Yeah.
you could kind of estimate what will be the market next day. So I wouldn't be surprised if it's again that way.
Well, and
Um,
I do the same on the weekend too, and this is why
mhm.
we talked about it. I thought it's weird that there is no one's come up with an S&P 500 coin yet that I can just trade, as opposed to, the actual market. Because
Yeah.
you're right, during the weekend when I'm like, hey, is it going to be, because I'm not on, I don't on the weekend, I get off all social media and everything and the news. I don't know anything about that, so I look at Bitcoin every now and then. I'll take a look. I've got it
Yeah.
like a little thing on my Apple Watch, and it's like, okay, it's
Yeah.
Bitcoin's up, means the world's not coming to an end, because it doesn't do what it should do, which what a lot of people wanted to do, which was to be a great hedge. It's usually just moving with the market. So let's just take a quick look and see what's happening here,
Mhm.
just off the open. I've got a couple screens to share. So here's just the SP 500 on a short term chart on the open. I can get rid of this. Excuse my little indicator here. This is something. Uh, I'm a quant, so I just have bots go for me. But yeah, there was this. I don't know if this was a tweet or whether it was that PCE stuff that you were talking about, but a little bit of a sell off. We've been kind of grinding up all morning, and now we're doing a little bit of a sell off the open. But for me, it's one of those, you take the low, you take the high of the pre market, and if you're not doing anything really outside that, then you kind of just sit on your hands, right? I don't day trade. I have a robot that does it for me, but if I were to day trade, those would be kind of the two areas I keep an eye on. And then for the heat map, if we just go, you can see gray represents almost no movement. I mean,
Mhm.
deeper the red, the deeper down, the deeper the green, the deeper up. And I set this to the entire Russell 3000, and that's like, it's like 97% of the tradable universe in the Russell 3000.
Oh,
The rest is just junk. If you're
Dell
not in the
just
Russell.
look at
Hmm?
Dell. Look at Dell. That looks good for a trade. You don't
Dell.
day trade, but I like this
Well,
takeoff from the 200 and from the 8.
I can add it to my bot if it's something I'm doing. But yeah, so
Mm-hmm.
this must have happened right on earnings, even though they missed across the board, a big spike up, then kind of came to
Let's
reality,
see.
and then now looks like it's rallying here. So
Let's see
this
here.
whole sector map is just showing me there's not one sector that's really leading anything. We got health tech down a little bit worse than the
Yeah.
rest of the market, but everything else is in that gray area. Means nothing's really happening.
Okay. Yeah.
Palantir up quite a bit. So this is a holding. I love this chart. I know there's a lot of fanboys to this company. I have no idea what they do, but just from the short term, I like that it had this all time high, it broke it, and then it's just been holding. So if it can continue to flag up at that all time high and then break through, full disclosure, again, I own some, so I'm totally talking my book here. But if this flag breaks out to the upside after this move, so this is where one of my systems bought in right here, and then the other one in through here. So if we end up breaking there, I think this is one of those that could get a little wacky. Again, the valuation is nuts, and I have no idea what they do. I heard it was just like AI, but for killing people as opposed to like letting you cheat on your homework. So good for them. I
Yeah.
guess if you own enough shares, they'll let you like tour what you can do a whole day. You can go tour their factory or something. I remember reading that somewhere, but it's a nice looking chart. What
Yeah.
else is on the
I am in MA actually since yesterday for a swing. My entry was 578. I had to,
MasterCard?
yes, I had $2 stop loss only. I'm testing new strategy that I'm aiming for hour trades and higher loss rate because I
Yeah.
kind of want to test something new out, and this one seems working for me. It looks pretty good.
Well, now we're
Interesting.
talking my language. We're talking quant stuff. So what kind of, because
Mhm.
with like a 5 hour trade, you only have to be right, what, 25% of the time to
Exactly,
make a
exactly.
bunch
So
of
I'm
money.
yeah, I'm aiming with this strategy. I might be wrong 70% of time, but I will set about $1 or $2 stop losses, which in this case is very small. But look, I want to be right and just rally, or I want to be losing extremely low, a small amount, and just retake the trade in case. So that would be my new strategy.
I have noticed as a trader, it is easy. As someone who runs a service in which I provide the clients the output of my algos, it is very hard to give them a 70% lose rate strategy, even though in my testing, when I'm,
Yeah,
doing the work myself, and this is why I always have a robot do it, is because my day trading strategies are like 40% accurate and all of that.
yeah,
The mental fortitude required to be
yeah,
wrong like 10 trades in a row and then come in and hit the button on that 11th trade in order to make it work is huge. And that's why I think the
yeah.
strategies work, is because most people just don't have the guts to
They
do
don't
it.
have exactly, and the ego, they can't take it, and the problem is also they just give up, right?
Yeah, and,
Yeah,
they will give up. They will take the 5 6 loser trades in a row, and then they will not take that other trade, and then that's the one that would have made back all the money plus
yeah,
a little bit more,
yeah.
and all of that. So yes, it becomes so. I'm very interested to hear how this strategy goes, because yes, it is one that is um, they work like these kind
Yeah.
of, and this is why most, if you look at, I have not met a, I'd say, honest systems trader that does like trend following that has a huge win rate for long term swings. But those are the guys who make the most money. So I'm
Yeah.
specifically thinking of like the turtle traders. These guys made
Hmm.
billions throughout their career
Billions.
at
Yeah,
like 35% win rate. So
yeah.
it just,
Some of the best traders that are mentoring me for past couple of years, these are guys that've been in their 70s. They made, as you said, hundreds of millions of billion
mhm.
dollars easily. Like they take trades that are like 50 million in one trade, and they all told me, hey, my win rate is 30%. Because
Yep.
I get out immediately if things don't work, and then I'm not gonna sit there and lose ton of money. I'm gonna just wait, and then when I hit it right, that's when I size in. And I feel like also with this strategy for me, like let's say risking 1% of my account, which I
Hmm.
do, if I'm risking $1, like just imagine like my $50,000 account, I'm risking 500 bucks. So, but this MA, okay, I risk $2, so I can buy so many shares, right? And then when I go right, I'm just printing. And if I go
Yep.
wrong, I lose 500 bucks. Who cares? But then if I win, I will make 2,500, 3,000 bucks. It's a
Yeah.
lot. So
And
it's just all in your mind.
well, and I don't know if you got a better answer for this, because the question I get from the my clients all the time is, how do you get used to being wrong that often? And the only answer I have is just over time, right? You just
Over
I
time, yeah, yeah.
I am so desensitized to hit a
Hmm.
button and then you hear the stop out and you go whatever. And it's just
Whatever. Yeah,
it's
yeah,
like the whole, if you're gonna drink a poison, you drink a little bit of the poison every day in order to get acclimated to it. I think it's how you have to do it, and it is the way to do it. Now, there are some win strategies out there that have higher accuracies, so those are ones that sometimes I say, well, maybe mix both in. Generally, things like mean reversion can have. I've got some mean reversion strategies with more like 58, 60% win rates, and maybe those are easier to stomach. But with that 60% win rate, it's basically a 1-to-1. So you're risking a buck to make a buck. You're going to be right 2/3 of the time, so it's going to feel better, but in the long run, it doesn't make nearly as much money as risking $1 to make, five, as you said,
yeah.
is going to do great. 'Cause especially you're going to have these streaks that really compound your account just through sheer luck, where you're right 10 times in a row, and these are huge trades because you're able to
Huge.
size up so big. So then you've put 50% plus on your account,
Yeah.
and you're
Hmm.
you're feeling great, and then you just it's one of those, I like just the saying of, this too shall pass. This is like when you're on that high horse,
Yeah,
also
of course.
remember it's going to come down the same way that
It
the
was in
lowest
May
goes.
now. I had by third week of May, I have win rate of 90% almost. I think I lost just from 13 trades on like one or two. I don't know. It was around 87%. Yeah. And I knew it's going to be over. And for fact, the next day or two, and I knew that, so I wasn't oversizing. I still play the same as I always do. It doesn't, as you said, after years and years of trading, you do not have the emotions of that intensity as you did at the beginning.
Mm-hmm.
I got stopped out that one day. It was, I think, last Tuesday, 4 trades. And two I got out before I was stopped out, but it was still minor loss. It was right here, yeah. Last Wednesday, that was the day, on 21st, yeah. So that was the high on Monday on the 19th. I'm like, wow, this is 19 days in May. I'm up 87% win rate, crazy money. And then next 2 day, there was like, okay, not nice. And then was the dump. So when I saw the dump below the 8 moving average, then I was just getting out of things and some got stopped out. And yeah, so since then it's been kind of choppy. And this week, Monday, or Tuesday, quite frankly, you could have played the long, Tuesday. You could have played the long weekend and just YOLO on Friday and hope that on Tuesday we open higher. But to me, it's gambling because honestly,
Yeah.
3 days, things can happen. So those guys, they're like, oh yeah, it's clear, you should buy the dip. No, that's not how it works because you might as well wake up and the market is down 5% because of some stupid tweet. So that's not how I play. I closed everything on Friday and then sure, Monday I woke up and there was this huge gap, or sorry, Tuesday after the Memorial Monday. And yeah, sure, I was missing out on some trades, but I don't care because I know I can trade safer later and I can take some trades that are calculated.
Well, and that's the other thing that comes with time too, is that ability to know that the market's open tomorrow, right? I think everything when you're a newer trader just seems so urgent, and it doesn't have to be, right? Like, oh, I took a loss, right? My equity was here, and now it ticked down a little bit, and I'm mad about it. And when you're experienced, you just say, well, the equity goes up and then it pulls down a bit, and then it goes up. If you're doing it right, it goes up and then it pulls down a bit. So I'll get that back at some point. Doesn't have to be in the next trade. And just like what you're saying too, is that, oh, I missed a big gap, and then people get mad for it. And you go, there'll be another trade tomorrow, right? It's,
Of course, yeah. There's
it's
always
just
a new trade.
it's managing those emotions over time that I think are the hardest part of it. So the only thing left I see on the dock there to look at is this Canopy Growth Company reported earnings this morning.
CGC, such a
Dang it.
disaster.
Look at these charts. Oof.
Oh,
So
oh,
high
don't even
of
tell me. I hate those.
800 on the, and I think this is a perfect example. I think the same thing's happening with solar here, and I always make these two kind of comparisons in which your product and your company is so good and so easy to produce, it gets commoditized away. So the reason I think that this links up with solar is because you build a solar panel, you can do it for really cheap. The thing lasts for like 25 plus years easily. Some of these are graded to 40, 50 years. That's great. You made a really good product, but then how do you make money off me anymore? Like I'm getting, and I know all this because I'm getting solar installed on the house here. And I'm like, when do these things go bad? He's like, technically never. He's like, we put a 25-year shelf life on them, but there's no moving parts. So in theory, these things will just go
Oh, really?
forever. So then
That's
I
good to
think
know.
about it. I guess there's some parts that can burn out and whatever, but it's really cheap to power my entire house. And I live in Canada, so I obviously need a lot more solar panels than a lot of places out there. Is going to be about, I think, 35,000 for that, and I never have to pay a power bill again. I never have to pay a heating bill again. So if you just run that math, it ends up paying for itself in a couple of years pretty easily. And then you've added a bunch of value to your house. And yeah, I was asking them about it, and he said, yeah, he's like, I've been doing this for a while, and I've never, every now and then a tree will hit one in a storm or something like that. We'll come out and replace it, but because they're modular, you only have to replace this little bit, and you don't have to replace your whole array or anything unless something catastrophic happens. So the reason I'm making this analogy while we're talking about weed stocks, I think it's the same thing. It's like they call it weed because it grows like a weed. It's everywhere. So how do you turn that, even though it could be a really good product, how do you turn it into a profitable brand when the barrier for entry is near zero? So I think the winner for all of these, everyone's saying, oh, just wait till legalization comes in the States. Again, we've done this years ago in Canada. It didn't help our companies up here either. Because what happens is you get these big companies, so like a Philip Morris or something, who's like, we know how to grow stuff, we know how to distribute stuff, we know how, so they're going to buy one of these, I think a Tilray or a CGC or something, and they're going to buy them at or out of bankruptcy and take their name, slap it on, right? Take some of those fields that were making cigarettes, convert it to weed, ship it out. It's like a line item for them,
Yeah.
and I think that's being priced in. I don't know if you've got
And they
another take.
also, I mean, they also pay top dollar for companies, right? They bought Jewel, I think was that one, the
Jewel,
cigar.
yeah,
Jewel, yeah, for over $1 billion. Philip Morris bought them. So
yeah.
yeah, they are buying. I mean, they have money. Why not? So wheat for me, yeah, it's a disaster. I don't trade that at all. I stay away. I don't want to speculate on this. It's like biotech almost. Like there are people they know this industry much better than me, and they should stick with that. It's not my cup of tea, to be honest.
I'm not gonna lie. I keep trying. I'd say I'm both break even, but I just keep trying to take a shot because, again, just for a trade. These are not investments. Most of these companies are zeros. But I just look at this MSOX. So this is the leveraged uh, cannabis whole sector, and this is just interesting to me because just these don't look big, but just back to these highs, an 84% gain. So at some
Yeah,
point,
yeah,
I think you got to take a shot. I just don't know where. And
yeah. And when you might sit there
because,
for years.
well, yeah, you could have said the same thing, right? At
Yeah,
7, you could have said the
yeah,
same thing at
exactly. Yeah,
25, you
yeah,
could have said the
yeah.
same. But at some point, it feels like one of those things where you take a shot, you sell half if you can get, a quick pop, and then you lock it away somewhere as just a YOLO with like a 0% chance that it's actually going to work. But
Yeah, but then like if I do those, let's say I do zero, or zero is my risk then, right? I just put the money there and I'm sitting, and honestly from my experience, I tried this before, and you're sitting there for months and months and months, it doesn't do anything. And then even like how much money do you want to put into those? 3K, 5K, 10K, and then even if it goes up 100%, it's not life-changing money for me to like be like paying attention to that. So I don't
yeah,
know, I'm just looking at it from that perspective. I can do actively much more than that if I want, and quite frankly I wouldn't put more than that, than, as I said, into this kind of companies, because you have
but
the risk. Like with Wolf, look at Wolf. Everyone was crazy about it. We
Wolf, yeah.
traded it because we saw insane flow into Wolf. I think I was out after like 50-60% on the equities, and some guys in my Discord, they stayed in for 100%, and then look, suddenly they filed bankruptcy and the stock is
Hmm.
basically $1. So you never know with
Yeah, and that's
those.
overnight. That's right, 60,
Hmm.
65% loss. And I
Yeah,
like what you
yeah.
talked about too with the mental capital, because I
Hmm.
hear that a lot too with traders. They say, "Oh, well, I'm just going to put 5 grand in, 10 grand in as like a
Yeah,
flyer and whatever." And what they're not taking into account is I think what you were talking about there, which is the mental capital. So you got
yeah,
a 10 grand, you got a small position in this company. And yes, it's not going to, if the company goes to zero, it's not really you're not gonna be outside holding the cup. If it triples, great. Good for you. You made 20 grand.
yeah,
But the amount of time you're going to spend looking at it,
yeah,
and it's just going to be kind of nagging in the back of your head. I'm totally with you that it's better
yeah.
to just ignore it, because I
Ignore
I
it.
had a buddy, and he had a policy that every time if he was ever in a stock and it doubled, he would sell half and then move the rest into a different account. And he found the same thing. He's like, all well and good. Eventually, he had, I think, 3 or 4 companies in there. He's like, but the amount of time I spend thinking about this account that's supposed to have, my free shares in there is
Yeah,
just ridiculous. So he ended up just selling
ridiculous.
them and then moving the money back to his main account and then making more trades with that, because it's
Yeah,
something that I don't think people value enough, especially in this world, is the amount of the mental capital that things take up with, right?
yeah.
You
I,
know,
I do not want to spend 1 year thinking about something that's worth $10,000 and can bring me $10,000 if I'm lucky. Also, remember the probability of success on those is extremely small because there are thousands and thousands of stonks like this. Like, which one do you allocate your money in? You know, it's not like I have a VC fund that I'm investing in hundreds of those and companies, startups, I would say, and I'm hoping the one is going to make me 10, 20, 30x. You know, it's just, yeah, the probability is so low. It's not worth my energy. Or even like dividend stocks. So my dividend portfolio gives me 8.3% yearly. So with $10,000, that's $800. I mean, look, it's not much, but I'd rather have my money if they should just sit there, do nothing. They're rather in something like, as you said, Costco or Coca-Cola or you name it. You have also high income dividends, like Nvidia now opened one, NVII.
Yes.
Did you see that? I mean, it's
NVII.
just, yeah, NVII,
Yes.
it's the Rex shares, and what they do, they're basically selling covered calls on half of their holdings, and the half of their holdings they keep in case the stock flies more than the covered call, so they don't sell everything. But they're generating returns, right? And they are, I mean, it's not that stable. If you see the chart today, they just started three
Yeah, they
days
just started.
ago. Yeah, but it's for some people, they want to have some income and they want to have more passive income and want to trade less. You know, there are a lot of those out there. Again, this is not a financial advice, but I'm just saying, having my 10 grand sitting somewhere, or for some people, they just put in $2,000-3,000, hoping for 100%. I mean, come on, if you really trade, you can make this money faster, and it's more fun too, just in like sit and look at those. So anyways, that's just my opinion.
Yeah, and it's the same, I always go to something like Jeppy, and this is the same idea, except it's just doing it with the entire S&P 500. So if you're looking for, I've convinced, and I've been talking to our boy Jordan about this, he's so young and he's sitting on so much cash, it triggers me. And I'm like, if you're worried about the market, just put it in something like this. So you're going to make, because it's doing the same thing where it's taking the S&P 500. I think it's roughly half it's selling covered calls on. And then the rest of it's in the market. And I'm like, at least if it's here, you've got that chance of an upside. You'll underperform everyone who just owns the S&P 500. But that's fine.
Yeah.
But to be in your 20s and to be sitting on cash instead of doing something with
No,
it,
it's
it
the
just
worst.
makes me want
Yeah.
to reach to. As an old man, I just want to go, listen,
Yeah.
listen, you little punk.
We made those mistakes.
Yes.
I started investing in the stock market when I was 29 because I had no idea. I was investing in products through banks. They gave me 4 or 5% a year, which I had no idea even how it works. And I was buying real estate. That's all I knew. But would I have had all this money that I just put in those useless, boring things? Even dividend stocks, I would not suggest to someone like Jordan to buy dividend stocks. You do that when you're 40 plus or 45 and you kind of want to just have a little bit of your income monthly from something passive that you feel like, okay, I can work a little bit less, or just
Yeah.
feel it like my money does something for me, you know. But honestly, even that is probably too early. That's why my dividend portfolio is maybe 5% of my net worth, not even, I think. So anyways, you're right, I have literally no cash whatsoever. I'm completely cash poor. Everything I own is invested, like
Yeah.
everything.
If I look at my bank account, there's even more than like, something simple like 5,000 in it, I start to
Yeah.
get like nervous. It starts to, like, what's it doing here? This is
Yeah.
why, like, there's a lot of these companies in the States, I can't take advantage of them, like Robinhood, that you can actually use like credit cards and things like that against your investments. Cause I think it's a great idea, because, you should be cash poor, right? Cash doesn't do even, and this is the time, there's never been a time like this, at least in my existence, that you've been able to do this much with cash, and it's still awful, right? The interest rates are higher than they've been for the last. Well, you can go to TNX, right?
15 years or so.
Yeah, at least, right?
Yeah.
All the way back. Yeah, TNX. Yeah, so it's been ages, and it's still bad, right? It's still
Yeah.
not anywhere near what the return of the market should be, but. Kind of ranting like this, I guess, because the market's not doing anything.
No,
We've
it's
covered
doing
the doc
nothing.
there,
It's
but
really, really boring.
um,
So,
no, I
but
think it's a good time to wrap it up too before we,
yeah.
I start old man ranting at everyone. But I would just say I'll leave the closing thoughts with you. But for me, it's just this: we are inside a tight range right here on the intraday
Mhm.
chart. that is inside a wider range on the daily chart. And there are times to really put your foot on the gas, and there's times to chill out with your friends. Like Leah, I'm glad you were here with me and just
Yes.
talk shit, because this is one of those moments where I'm looking at my bot, and I think last time we were on, I was talking about how crazy my bot was going. I think I've gotten one trade so far, and usually by this time in the morning, there's like 15. So that should show you that, right, things are calm, nothing's really going on, everyone's waiting for resolution. So, do you have any thoughts to leave the
I
people with?
totally agree with you. As I said, when the market is giving, when there is a trend, you go heavy. You have those 5 hour trades. You have many of them. And when market is choppy, just relax and take care of yourself, because this is a draining work. And at some point, just to close it, last time I saw my granddad before he died was me sitting at the computer and I was explaining him options. It's kind of nice, but I spent hours and hours when he was dying trading, and I was even trading this kind of market. And now when I'm looking back at it, I was like, well, I should have better closed the stupid computer and sit with him and actually enjoy the moment. So that's what I'm saying. Life is too short. When market is giving, do it. When market is choppy and boring, go outside, do something else. So that's pretty much all to
I
close this
think,
session.
yeah, I think that is an amazing lesson, right? We do
Yeah.
get too caught up in this. So,
Yeah.
go enjoy it, and thank you guys for tuning in.
Thank you, everyone. I will see you next week. Thanks, Michael.
Thank you.